Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now all of a sudden we have a few things taking place in our on our charts to help establish a directional bias with a high probability of accuracy. And what that might be is back when this area of consolidation was taking place, we might look for that pivot point break there, a break below the 50% line here, and a cross of our MACD there as a signal to go in and buy some puts, and then of course we'd be establishing our targets based on previous price action. Now, one thing that again I want to sort of draw your attention to here is that on the Canadian, U.S. versus the Canadian, the CDD, we have a completely opposite thing taking place in all of our indicators. You can see that our price action started to consolidate at a key support. We were down below the RSI, or down the 50% line, but we crossed above that, suggesting that we were starting to gain momentum to the upside, and now we could be somewhat comfortable of the continuation to the upside. And the thing is, guys, although we see price fluctuation, if we look at, based on the RSI, where our two there's our MACD crossover supporting this 50% line crossover, and again lending support to that move into a higher price targets. What we can see is that although we've had some fluctuations in the YUK, we consistently remain below that 50% line, and what that's telling us is that, hey, we have to be cautious of any rally here. We can certainly take advantage of short-term bullish moves because, hey, let's face it, there's money to be made regardless of what market we're in, but we just have to be cautious that any rally is going to likely meet with some tough resistance at some of these key levels. So as long as we're below that 50%, that supports a continuation to the downside. If we look at it on the Canadian side, you'll notice that we were consolidating in this price range here, but consistently remained above that 50%. Now we broke below that, but what we're looking at now is now a start to break above. We've got our histogram suggesting some divergence here with our test of the lows, and we can then go in and say, all right, again, a break above that key pivot will allow us to establish a directional bias with a little more probability. Now, I would be more comfortable with a conservative entry at this stage, guys, above this key level in here. So basically above this 123, 124, because what that opens the window for is a test of this 130. So at this point, with the CDD trading in and around that 122.43, there is the possibility for a move into this as I said, that 123, 124 level, but a break above this key level here where you can see prices really consolidated. If the market is able to push above that, if we see our pair values break, we've got a case for a test of that 130 level, and of course we're gonna make sure that our confirming indicators support all that. Again, Steve, any questions on that as we move forward? We're getting kind of tight for time. I've got a couple of things I want to talk about before we close up here, but feel free to add anything.
That's perfectly clear. Yeah, let's keep going. So I don't want to cut us off here.
Good stuff. Now, of course, we want to tie everything in with identifying some important reversal patterns. So what I've done is I've just picked a couple of my favorites because they're really a couple of the easiest to identify. Now, reversal patterns is something that we've really sort of already touched base on, in the sense that we talk about support and resistance levels. So reversal patterns really come into play at these key support and resistance levels. We must see, of course, an existing trend in place. Again, not rocket science, in the sense that a reversal pattern comes at the end of an existing trend. The first signal is a break of a major trend line, so that's giving you a bit of a clue, and we're going to talk about this, and we're going to look at an actual price chart in a second. One thing to keep in mind, guys, is the larger the pattern, the more significant the move. So if you see a pattern forming over a longer time frame, that means that once the one direction is committed to, generally that means the one side essentially has to kind of just step back and let the market go where it's going to go. So the fight will last for a longer period of time, but when that battle's won, you tend to get a more aggressive move in the breakout direction. And topping patterns tend to be more shorter and more volatile. Reason being, guys, is that, again, I only have to reference the existing market for you to understand that as people become afraid of losing their capital, they run for the exits much more quickly. It's that old burning building mentality. If somebody yells fire, you're going to run for the exits before asking whether or not there's actually a fire. And the reverse is true when we look at getting back into the market, and this is why you're going to see this in the overall equity markets, is that people are less inclined to jump right in. In other words, you're not going to run back into that burning building until you're 100% sure that fire is out. And so that bottoming process tends to be a lot smaller price ranges and takes a lot longer to form as that confidence continues to build. And that's no different when we're looking at our ISE FX option pair values as well. So the first that we're going to look at is a double top. Of course, we have a rising market. And just as we were discussing in trend identification, we make a new high, which ultimately represents resistance. We see a rejection, which pulls down into that support level. We've already kind of been through this whole process. We play back into that high, unable to break that resistance. We now have a signal that, hey, this market is probably looking at reversing, or at least doing some consolidation. We get a test of this support, and then finally a break of that key pivot point right in here, and that signals the actual confirmation of a double top and the initiation of, in this case, a downtrend. Now, your double bottoms, I mean, again, very similar. We've got a falling market. We play down into a new low or a support. We rally into a resistance, reject, play down into that support, unable to break, and then a break above our key pivot here again breaks this pivot and makes a move. Now, what we'll do, of course, is we're going to tie in when we're actually looking at this to make an actual trade decision, is we're going to tie in what's happening in our MACD and in our RSI. So as this bottoming process is taking place, we're going to be looking at what's happening in our RSI. Are we crossing back over that 50% line? What's happening in our MACD? Is it crossing up? And then finally, that price action is going to confirm the trade entry for us. Now, let's look at it on the CDD based on sort of the recent formation of a double top. We had a play into a resistance. Okay, we had a rally, we had that rejection, we had that rally, didn't make a higher high, and then finally we had that push down into that key pivot. There's your double top. Your break below that key pivot there signaled the potential for a move to the downside. Now, although we're looking at the possibility of a move to the upside, that break ushered in basically a 5-point drop on the CDD to play down into a sort of a key support level, or the next support level, if I could just sort of establish that area right down in here.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.